Hi everyone, it's Jack here from Robson Laidler's Business Accelerator team, and I'm here to give you a very brief research and development update. So rather than ream off paragraph upon paragraph of statute in relation to the new R&D rules, I'd rather ground it in some kind of story. So I'd like to introduce you to Sarah. Now Sarah is the sole director, shareholder and employee of Xmas Decor Limited, which is a business that designs bespoke and innovative Christmas decorations using robotics and AI. They have a year end of the 31st of March to time with the tax year end. And like many SMEs, they operate using a low salary, high dividend remuneration strategy. Sarah also set up around about 4 years ago a self-invested personal pension scheme, which she's not contributed into since year one. Now, as the name of the company suggests, the business operates in a very seasonal market. Therefore, their trading cycle is very rigid, with the start of the year being dedicated largely towards product development and sales networking, with the back end seeing the majority of the sales take place, largely in the last 3 months of the calendar year. This makes it incredibly difficult for Sarah to do any kind of proactive and meaningful tax planning, as she's largely reliant on the results that come in January before she can work out what she can do in relation to remuneration and profit extraction. Fortunately, December 2021 was a particularly good Christmas for Sarah, and therefore when she sat down to do her tax planning in March 2022, she was able to pay an additional £30,000 in dividends to bring her up to her basic rate band, as well as pay 3 years worth of directors' pensions contributions, taken up to £120,000. As this £120,000 pension contribution is allowable for corporation tax, it has a fundamental effect on the company's year-end results. As you can see, they were initially projected to make a £60,000 profit, but instead made a £60,000 loss before tax. And although they had a particularly good Christmas 2021 in terms of trading, there were still significant cash flow implications from the drawing of £150,000 out of the company bank account, particularly as any residual funding is normally hypothecated back into the business, so it can fund another round of product development. However, Sarah has used research and development claims as a cash flow management tool in previous years, and often uses the rebate to cover the company's overheads, as well as fund the beginnings of product development during the so-called quiet period of the trading cycle. And this year is no exception. If we have a look at her qualifying costs for the year-end 2022, we can see that she has attributed 80% of her time down to product development, which has been apportioned against her salary and pension contributions. She has also identified £8,000 worth of materials which are used purely for the product development process, and this means that the overall qualifying costs come to £111,000. As this claim was completed under the SME scheme, these costs are uplifted by 130%, and the resulting £145,000 is the figure which is deducted from the company's corporation tax return. However, what the company have not considered were the changes of the rules which took effect from the 5th of April 2021, which potentially could change the amount of the rebate that the company can reclaim. The best way of illustrating the changes to the research and development rules are by doing a side-by-side comparison of the corporation tax computations between the old rules and the new rules. And on the face of it, there isn't any kind of difference whatsoever. Assuming that they have made the same loss before tax, added back the same depreciation and calculated the same enhanced expenditure for research and development calculated on the previous slide, then ultimately they'll both calculate a total taxable loss of £200,000. However, it's when we calculate the rebate itself is when the differences become apparent. If we look under the old scheme, the company would be entitled to a research and development rebate of 14.5%, and as there is no research and development cap in place, they'll be entitled to the full amount back, which in this case is £29,000. However, under the new rules, although the company still would be entitled to a rebate at 14.5%, that is capped at a maximum of £20,000 plus 300% of the total pay-as-you-earn and NI liabilities for the period relating to research and development staff. Now, given that Sarah doesn't pay any pay-as-you-earn or NI contributions from her salary, means that she would be limited only to that £20,000 rebate. And as we can see, the company is missing out on £9,000 or 30% of a potential rebate that they could receive, purely just down to poor tax planning. So what can be done? Well, one potential option is for the company to forego the research and development rebate entirely and instead offset the losses generated from any research and development claim against future profits. However, this may not be ideal for any business that is particularly strapped for cash, or one that is making research and development claims in perpetuity. If you are making a claim year on year, then you're unlikely to generate the necessary profits to enjoy the losses that have been accrued from the research and development claim. Another potential option is to revise your remuneration strategy to maximise your corporation tax relief via a research and development claim. This would mean the likes of Sarah moving on to a high salary, low dividend remuneration method. This would have the benefit of maximising any corporation tax relief through increased salary and employers' NI contributions. It would also optimise any potential research and development rebate, as you would be maximising your qualifying costs, as well as expanding the pay-as-you-earn cap that's been implemented under the new rules. Finally, you would also potentially, if you remove dividends entirely from your remuneration strategy, that the likes of Sarah wouldn't necessarily have to report for self-assessment for personal tax reasons. However, this would also depend on whatever income she had been earned during the year. However, it's important to note that research and development is not necessarily a silver bullet. It only focuses on one particular area of tax planning, corporation tax. A more holistic approach needs to be taken, as there will also be pay-as-you-earn and personal tax implications that need to be considered to find the optimal position in terms of tax planning. So what's the moral of the story here? Well, first and foremost is to keep in contact with your accountant, business advisor and tax advisor, as having regular conversations with them about your business enables them to give you their best possible advice. It's about getting your relationship to a point of absolute trust, whereby they are the first person you pick the phone up to anytime you experience a problem or opportunity within your business. Secondly is that small changes can result in big outcomes. If we use the research and development example we just worked on, we can see that the company can make a relatively small change to their remuneration strategy, resulting in an additional £9,000 worth of tax received back from HMRC. Ultimately, it's for business owners to surround themselves in people that help them identify and make those small changes and realise those larger outcomes. Third and finally is that planning ahead is invaluable to the success of a business. Now, we can argue that Sarah's decision to remove £150,000 out of the company prior to the year end may not have the long-term interests of the business at heart. However, if they had some overarching strategies and aims for the business, then that may have affected the decision that Sarah made in terms of how much she withdrew from the business. Ultimately, it's about getting a business plan written down on paper and setting some direction and some metrics for the company to measure itself against going forward. I hope you found this useful. Thank you very much for your time. If you have any questions in relation to the change in research and development rules or any research and development questions in general, feel free to get in touch with me with the contact details that are on screen now. Thanks very much.